Yo, yo, yo. Hope you guys are all doing well. In today's video, we're going to be going through a EG buy that I caught. Now, the way we're going to carry out this video is by quickly outlining the confirmations that I personally utilize to pull the trigger on a trade, which is top-down analysis. So we go through the weekly, sorry, we start off on the monthly, then the weekly, then the daily, then the hourly timeframes. From top-down, we also look at S&D zones, and then we also look at the directional bias, and then potentially some order flow. But in this occasion, we're not going to look through any order flow because it just doesn't, come into the trade. Like we don't really need to analyze it. And then from order flow, we look at confirming the trade. Okay, now my confirmation in terms of the trades are very, very simple. It's just a 15-minute break of structure to put it simple. But yeah, confirming a trade. So these are the things that we're going to be looking at into this video. So let's just, carry it out straight away. Let's go on the monthly and see what we've got. Once it loads, there we go. So we have a reaccumulation over here, as you can see, with a huge up impulse, bullish impulse, sorry. And then we have an accumulation that potentially mitigated out of this reaccumulation, meaning we can formulate a bias that price is potentially going to go higher. Okay, now in terms of Wyckoff market cycles, after your accumulation, you can expect some sort of reaccumulation. Okay, meaning you can expect or form a bias that price will go even higher. Okay, so we've got two things pointing out towards that price could take out this high and go higher. So now let's go on the lower time frame, aka the weekly, and see if that bias is being confirmed. Okay. So on the weekly, I can see we have a type 1 distribution. We have your buying climax, automatic rally, secondary test, minor sign of weakness. You have your up thrust, you have your major sign of weakness, and then you have your up thrust after distribution. So you have your UTAD, which breaks below this low, aka the schematics structure, and breaks below the trading range. The trading range is from your buying climax all the way across, and then your automatic rally all the way across. Okay, so this is a fully confirmed type 1 distribution, meaning our leg that we could utilize for structure would be from this high to this low. I would personally look for any supply zones in this leg to then formulate a bias that price could potentially carry on lower. Because if price is bearish, you just have to assume or anticipate that a new low is going to be put into place, right? You can't just guess that there's going to be automatically a new higher, right? Unless you have some other biases on the higher time frame. But in this occasion, we don't. So we have this supply zone right here. If I just quickly grab it, there we go. We can formulate a bias that price might actually come into here and then potentially go lower. So from that opinion or bias alone, what I need to see on the lower time frame is, do we have a bearish trend which then switches into a bullish trend? If we do, that's when we take the lower time frame demand zones to then potentially take buys higher. Okay, so let's go on the lower time frame, aka the daily, and see what the structure is saying from there. Now, in terms of the daily structure, if I just quickly cut to the chase over here, we have a lower high, lower high, lower low. That low initiated a new higher high. Then we have a higher low, higher high. Okay, so now structure has shifted to bullish structure. What does this mean? This is potentially a confirmation for the bias that price will come into this level. Apologies, I don't know why I have this here. So we have the confirmation of that bias I previously just made on the weekly time frame. Now let's go on the lower time frame and see how we can act upon that bias. Okay, so can you see how we're just diving deeper into one directional bias? And then that's how we start to, look at confirming a trade and so on and so forth, right? Let's go on the 8-hour, see which leg we're trying to utilize. Again, just to quickly recap the structure, we have lower high, low, high, high, low, high. So this is the leg that I utilize to look for demand zones inside of. Okay, not just any demand zones. We look for demand zones specifically below the 50%. Okay, so below this blue line, I just simply drag my flip tool from this low to this high. We're going to look for any demand zones below this blue line. If I go on, for example, the 4-hour. All right, cool. So we have quite a few demand zones here. So we have imbalance. Imbalance in a bullish trend indicates that there's a demand zone below it. Imbalance in a bearish trend indicates that there's a supply zone above it. Okay, so we have this imbalance over here, which indicated that there's a demand zone, and then we also have this demand zone over here. What we can do is just generalize it to the bottom of this wick. Why? Because that's how the orders work, in my belief. Okay, so we have your down before the huge up move, which is with this. So if we do this, so as soon as price goes higher than the sell orders, that's when they can start mitigating orders. Meaning, as soon as they come and tap into it and go higher, this is the orders that's left. Okay, in these sell orders that are in drawdown, these are the orders that's left as opposed to all of it, which is over here. Okay, so that's exactly what I've done over here. You can see these are your sell orders. This wick tapped into these sell orders by a tiny bit, so you can expect that those sell orders to be mitigated. Let me just quickly do this, sorry. So you can expect those sell orders to be mitigated, meaning this is where you would generalize your demand zone. Hopefully that made sense. But yeah, now let's go on the confirmation aspect. What do I look for? I personally look for a 15-minute breakout structure inside of my demand zones. Okay, now that's just to put it simply, the concept that I like to use, or say that I use, because that's just where it's derived from, is the chain reaction concept. So my belief system of the market is, in order to get, for example, a daily breakout structure, I need to number one get the 15 seconds, then the 30 seconds, then the minutes, then the hourly, then finally the daily, right? So from that concept alone, what I'm going to look for is a lower time frame breakout structure. I could look for a 1-minute breakout structure. I could look for a 30-minute breakout structure. Whichever one you want to utilize, right? But for me, 50-minute is my sweet spot. Okay, now it doesn't work with every single pair. That's why you need to journal, get the data. Once you got data, that's when you can act upon it. I don't know why I clicked. Apologies. Let me go back on a window and then replay mode it. There we go. So now let's go on the 15-minute time frame and then start looking for our confirmation. What we can do is also delete our fib tool. Let's go on the 15. Cool. Now we just simply wait. Okay, cool. So now what do I look for in terms of looking for a 15-minute breakout structure? It needs to give me good spacing in terms of the retracements. So we have this low low, we have a lower high, we have a low low, lower high, and then low low all the way down here. Now the reason why, for example, I wouldn't use this is because of the gap in between these two lows. Okay, because the gap isn't sufficient enough, I wouldn't use it personally. Okay, whereas for example this gap, so this is a fake candle by the way, from this low, lower high, lower low, you can see how many candle bodies would fit inside of here. If it's around 5 candle bodies, then that's perfectly fine for me. Whereas in this occasion, it's around 12 bars. So that's really good. So because of that spacing, I'm able to utilize this high for it to break in order for me to confirm this as a confirmed trade. Okay, so with that being said, let's just quickly mark this up. As soon as that high gets taken out, that's when I look to get involved. Okay, if price, for example, just distributes and goes lower, that's when I look at this lower high to be taken out. Okay, so if price goes down, makes a new low, that's when I look at this lower high. Okay, hopefully this is all making sense, but let's just play it out. All right, cool. So now we've broken the high. What's next? If I just quickly delete this demand zone, bear with me. So what's next? Now what's next is to find a demand zone. But which demand zone do I utilize? If we just quickly recap structure, we have a low low, lower high, lower low. That initiated a new high high. Is this a coincidence? No. Why? Because we tapped out of demand. You can expect demand to come into control on these lower time frames because that's the chain reaction concept, right? It affects the lower time frames before you see it affect the higher time frame. So we use this leg to look for any demand zones inside of. Now, I personally utilize a demand zone in here. Why? Because this is your reaccumulation. Now, in terms of Wyckoff, what reaccumulation is an introduction of more longs into the market. Meaning, if price really wants to go higher, they would want a lot more buyers on their side. Meaning, it wouldn't really make sense for them to take out the buyers and then go higher because you need more buyers on your side, right, in order to take price higher. So it only makes sense for price to respect this low. Obviously, we can never ever know if price is going to respect or not, but this is what my thought process was as I was taking this trade. Okay, so I personally utilize the 30-minute demand zone, just like so, and then had stop loss below this low. Now, in regards to TPs, it's as simple as this. If I just go on the 4-hour, we just need to look at the next structure point. So again, just to quickly recap, we have a low low, lower high, lower low, high high, high low, high high. What's next? A high low, high high. So if I'm anticipating this to be a high low, where does price need to go in order for it to be confirmed? In order for a high low to be fully confirmed, it needs to initiate a new high high, meaning my TP would go up here. Okay, it's as simple as that. Now let's go back on the 50-minute and see what happens. So price presents a distribution, which is essentially used as an excuse, which you'll see over here. There we go. So this distribution was essentially used as an excuse just to tap back into this demand zone and then go higher. So if you just keep on playing it out, you'll be able to see it hits TP. If I go on the 4-hour, There we go. Boom. So TP is hit, and then obviously you can hold on to partials depending on what your risk management plan says. But this trade took around 22 days to play out. It did go sideways for the majority of his time, but it is what it is. Sometimes these things happen with these trades. Now, in regards to the broker feed, Owanda shows that it hit stop loss, but in reality, it didn't. If I just quickly showcase it on my chart. There you go. As you can see, it respected the low. It's just a one that shows that it hit stop loss when it didn't. But yeah, that'll be it for today's video, guys. If you do have any questions, please do let me know. But yeah, other than that, I'll see you guys in next month's video. Take care.